Welcome back to the investing show. Let's do some live trading. Guys, let's start with some live trading of futures, of stocks. Many of you have been asking about futures, so let's do this. Second part, we can answer your questions around fundamental analysis. What are the best stocks to own in your portfolio over 2026 and 2027 and beyond? Let's see, guys. Let's start with the markets. Markets have opened a few minutes ago. We have the volatility index at 14.8%, which means that's good for the compounding portfolio. Your stocks will go up today. Now, if we look at the markets themselves, these are the S&P 500 futures. They act accordingly. They are up 0.5%. Some of our favorite stocks, Melly up 6%, Klar up 6%, Sea Limited up 4.2%, Arista 3.3%, Comfort System 3.5% up, Amazon up 2.3%, Amphenol 1.6%, Visa 1.4%, FICO 1.1%, AppLovin 0.4%, CSL, Carlisle Companies up 0.46%, Ferrari flat, Linde flat down, Harvia minus 0.9%. That's our favorite companies to buy and hold. We will look at them later on when we talk about investing. But right now it's about trading. So what can we trade today? Let's sort this out. And we can see that there is a lot of stuff that we can do right now in terms of trading. First of all, I'd like to sell a spread on the NQ futures. And I like to sell a spread on the ES futures. Also, our gold futures are printing. We're up $1,000, so we might want to close that. But before we do anything, we do money management. So let's go to our money management tool. If you don't have a money management tool, go to strategiesprints.com, use ours. Money management tool tells you input the VIX right now, 14.8%, and it tells you exactly how much you want to have invested. So at 14.8%, you enter your current cash position and liquidity positions, and then you see that we should be 75% cash, 25% options today. So whatever your account size is, let's get 25% of them to work. If you are above that, close some. If you are below, let's do this, guys. What can we sell today? Let's look at our watch list. We sort them by liquidity. And we see that NVIDIA has extreme volume and good IV rank. So we might want to do NVIDIA. Then TSLL, wonderful too. Tesla, ETF 58 in implied volatility. That's wonderful. Very liquid. Silver looks good. The TQQQ looks good. IBIT looks good. Tesla looks good. And the SPY. So let's go with them. Palantir looks good. And I think we have Palantir on. QQQ looks good. And we will do a second one, I think, on the NQs. We want to sell a put spread on the NQ futures. Amazon looks very good, actually. Why don't we do an Amazon spread too? And I like Netflix too at this price. But 20th of January earnings, yeah, we could do a week before. Let's go slightly shorter, 35 days instead of our usual 42. AMD also looking good. So those are potential underlyings to sell puts on today. Are you ready, guys? What is your pre-trade plan? So now that you know the amount, we can go to our pre-trade plan, which we always share in the income section. This is the pre-trade plan for today in the Sprint Club. And so we just saw NVIDIA very liquid. So what about a put spread 10 wide, 45 days, 30 delta? I'd like that. Let's see if it's on already. Because NVIDIA is usually our go-to together with the ES. It's rare that we don't have an NVIDIA position on. Meanwhile, guys, what's your pre-trade plan? What questions do you have for today, or insights or things that you want to look at? Where can you find the pre-trade plan? So you go to strategysprints.com and you will find the Sprint Club. It's free. Join us for 7 days. You can walk around and you can grab today's pre-trade plan. It's in the section called Income. And it's the pinned post, the very first post that you find. So we can do this together. Let's see. Yes, gold is printing. Our ES is doing well. Amazon is doing well. The gold bull spread is doing well. The Google bull spread is doing well. The NVIDIA bull spread is flattish. And the Palantir bull spread is flattish. And the Reddit bull spread is doing well. We could even close them and take off some money. For example, let's look at gold. We could close gold at 18. That's not worth it yet. And then there's another gold. What about the gold put spread? We could close that one for $1. Let's see, what did we pay? We paid around 2.4. So that's one to close actually. Let's close it for $1. Take the money. Because you don't have to wait 200%. Next one, I would love an additional NQ. NQ, let's look at the pre-trade plan with NQ 12 delta. Let's do this. Meanwhile, let's see if the markets are still behaving according to the initial move, because there is usually after an hour, 2 hours, the first shift in trend sometimes. So the VIX is up to 15, slightly up, which is good for us, because the higher the VIX, the higher the premiums you can collect. And markets still up 0.6, looks bullish today overall for the markets. Mercado Libre, we are very happy to see it up 6.4 after the recent weakness. We have been accumulating Mercado Libre more and more over the last months. So we're happy to see that. And Kla, definitely a great company. C Limited is also a big position in our portfolio. So happy to see that. Arista calmed down a little bit after breaking through this support zone. And Lindy a company that is very much undervalued by the market, which I think can do 23% this year. CEO Sanjeev Lamba has been buying $1 million recently, December 8th. And if it goes up 23%, which I expect, we are talking $520. So another $100 increase from here over the next 12 months. Of course, nobody can predict 12 months, but we have a pretty good feeling of it going forward 10 years. So I'm in. I am in. I like Lindy as a long-term play. And with this, we're transitioning to the investing part of the investing show, right? So in terms of trading, let's sum it up. We want to sell today a put on the MNQ 45 days 12 delta to make 12%. Put on the ES to make 10%, 45 days 12 delta. Put on gold, which is on already, to make 9%, 12 delta 45 days. I put on AMD 45 days, 30 delta. I put on Hood 45 days, 30 delta. And I put on Palantir, which is on 45 days, 30 delta. Now we will close gold and open up the exact same 45 days out, 30 delta. Then on the put spread side, which is defined risk and has two legs, selling the gold futures, 25 wide, 45 days, 12 delta, gives us 33%. Selling the NQ, a second one, 45 days out, 100 wide, 12 delta, 31% yield. Selling the ES put spread, 45 days, 12 delta, 19%. And we want to do the same thing with Meta, Reddit, Nvidia, Google, Palantir, Apple, Amazon, Microsoft, Arista, Roblox. Arista is not always very liquid, so I skip it if it's not liquid enough. Roblox, Tesla, very liquid today. Broadcom and Oracle. These are the favorites for today, but before we actually sell them, the next step in our process, as you know, if you're a regular, is we go to our watch list and rank them by volume because we want to start with the most liquid. If they don't have a few millions in volume here, like 32 million, 28 million, this is fantastic. If they don't have at least 10 million in volume, we don't start with them because the more volume, the more liquid, and the more liquid, the easier it is for you to get in and out. And if you are an experienced trader, you value liquidity above quality, frankly, of the underlying. I might have a low quality product like IBIT because on average, we only stay in there for 12 days, 14 days. So quality actually in selling options matters less to us than liquidity. Because if it's a bad trade and you can get out quickly, that's a much lower risk. So you can even go with lower quality underlyings because you can get out quickly. That's why liquidity matters. And the second thing that I look at is market structure. How do you see market structure? It's the gap between the bid and the ask. So for example, if we go to NVIDIA, the gap between bid and ask is very tight. It's 190.1 to 190.08. That's fantastic. It's as tight as it gets. By the way, if we are here, let's do one live, right? So NVIDIA, let's do a 10 wide put spread, which we pay 1,000 for to make 200. So let's go with a 10 wide put spread, We go slightly shorter this time because there is earnings. So let's do 32 days instead of 42, just to avoid earnings, which are in February. And we go for a 30 delta, 10 wide, 10, right? Yeah. So the probability of profit is 74%. Max loss 700, max return 214 per contract. Now, keep contract sizes as low as possible, never more than 2% of your portfolio, because you want to stay small. That's risk management. Very important. Stick to risk management rules. The successful trader, they stay in the game long enough to win. And most traders, they lose money because they go too big on the single position sizes. Remember, you want to be very big in your compounding portfolio and very small in your income portfolio. So this is the option side, the income portfolio. Small, stay small, and trade often. That's the rule here. Strategy is staying small. So NVIDIA, you put in 1,000 to make 200. Depending on the size of your portfolio, stay very small. I will go with 3 contracts here, and I will bid for 2.2. And I want to collect credit, so it's 2.2 in credit for 3 contracts on NVIDIA. Will we get filled? Let's see. Boom. We got filled immediately. So we received, we sold an NVIDIA credit spread. We sold a put spread for February 6th, 2026. Strike price 180, 170. And we have collected 2.2 per contract. Well, that was the limit order. Now, let's see what we actually collected, 2.2. So we collected 2.2 on NVIDIA. Let's go and document it in our spreadsheet so that we have everything in one place and we can evaluate, right? So we have 303 winners right now, 20 losers. That's a win rate of 93.8%, pretty high. And it shows you that it's a very repeatable, low-risk system. Otherwise, this number would be much higher. So we have capped our possible yield to the upside because we wanted to create the conditions to have many small winners. So the wins are very small, 200, 900, 270, 320, 960, $11, $500, $300, $5, minus $1, minus 1,500, 280. So it's tiny, right? 1,000, 2,000, 1,700. It's small wins, but they compound because if you have many small wins, then they compound. 2 in total. What did we do? Last year, we did in January nothing, in February nothing, because we started documenting this in public in March, the portfolio. And so in March, we did 900, in April, 5,000, May, $13,000 in profits, June, 10,000, July, 12,000, August, 8,000, September, 10,000, October, 13,000, November, 9,000, December, 13,800, which is a monthly average of 8,200 with a small portfolio and with a beginning maturity of our strategies, which in total made us $98,700 in profits, net profits after fees and commissions and before taxes. And now we're starting the year with 170K ready to rumble. So that was the first year. Now we know that it works. We know that those 2 simple strategies work, selling puts and selling put spreads. We have only added in the last few months futures as a possible underlying, but the strategies have stayed the same. I described them in our guide to options. If you want to grab it, it's for free in the Sprint Club. It enabled us to make 50% last year on this portfolio. And it's really two simple strategies: selling spreads and selling puts. That's it. One more underlying, but two strategies. It's really important that you start with money management. So before you do any trade, check how much percent based on the VIX you should have ready. And if you don't have a money management tool, use ours, strategysprints.com. Now, let's look at our quantitative research. I have been doing my favorite thing, which is comparing the best companies to each other, ranking them to each other, which I do every week, because it's not enough to find good companies. You have to monitor if they're still the best companies, right? So for example, Comfort Systems surprised me with an 84 out of 100. I didn't expect that. It's an incredible company. TSM, everybody knows that it's incredible, but there is some geopolitical risk in there. 82 on Amphenol. Amphenol is absolutely crushing it. It's riding all these secular tailwinds. And then we have Carlyle. This was an absolute surprise. Arista Networks, which is one of our biggest positions in our portfolio. Visa, top dog. Amazon, of course, one of our favorites. Lam Research. Credo surprised me. Credo and Eleb were two companies that we looked at in 2025. And actually, Eleb was more enticing to us. And we got more questions about Eleb in the community. But then one specific move that I've shared in our community changed everything. And now Eleb is not interesting for us anymore, but Credo has become even more interesting. It's starting to begin to show some moats, even if it's quite young. So 76 is a very high. And then we have Linde, where the CEO just bought on December 8th, just bought $1 million in additional shares. He's very positive. There is a CNBC interview with him on Mad Money that's really good. So he's a very trustworthy CEO. And the company, Linde, has an incredibly resilient business model. Would I call it recession-proof? No, I don't think anything is recession-proof. But would I sleep well during a recession holding Linde at 10% in my portfolio? Yes, because it will recover quickly. And it will have less drawdowns. Like when Amazon goes down 50%, Linde will go down like 25% maybe. So it's easier not to sell during their recession. GE, pretty good. Obviously, SPGI. Tel Aviv Stock Exchange. Did you expect it to rank that high? I didn't. Safran, of course, also insider buy December 1. French company, basically the GE, French version of GE Aerospace. ServiceNow, TE Connectivity, Vertiv, TransTime, also with a buy in November 14 from insiders. BlackRock, Texas Pacific, and Sea Limited. Heiko, buy, insider buy, October 21. Artesh, GE Vernova, IBKR, FICO, and Reddit, also with an insider buy, but that was in March. So not sure if we should still count it as an insider buy. Wise, American Express, Ferrari, AppLovin, Landbridge, Union Pacific. So you see, I have been doing a lot of fundamentals work because that's my thing. I really love this. And by the way, Casey Stubbs is not here today. He's at the dentist's office, but he might jump in if he's done earlier. Happy to answer some of your questions, guys, around fundamental analysis. This is what I am seeing right now in the markets. I'm curious What are you seeing? What are you excited about? Let's have a look at the markets. VIX up 2%, 14.8, the way we began. And generally, markets up 0.6%. Let's look at the outliers. We have Lam Research up 5%, Palantir 3.7, Robinhood 3.6, Tesla 3.5, and gold 2.9, as well as Mercado Libre up 7.6%. That didn't happen since May of 2025. I like that. Bullish C Limited. I wrote a big article on Meli and on C Limited. Let me show you the big articles. I've put a ton of effort and attention into these articles. You can find them at theinvestingshow.beehive.com. I'm happy that some large fund managers of large institutions, of large funds, are subscribed to the paid version of this. So it's a validation, right? That something is going right. I just shared the Q4 2025 letter to our partners where we review the overall performance. We did 16% over 3 portfolios, real estate 5%, stocks 11.8%, below markets, by the way, but it's fine because earnings are going up, and that's our metric. And also, of course, second metric is our money getting up, our net asset value or overall net worth. Is it going up or not? So those two things are fine. And then the third one, the outlier, up 49% on the income portfolio. So you can see all details here in the Q4 newsletter. And we discussed Mercado Libre and C Limited, which I think are both cheap right now. Also very interesting is Credo. Credo is riding the AI wave, and Aleb and Credo were two hot stocks in 2025. Aleb, I think, is out of the game for us from our perspective, while Credo is starting to show some moats, some defendable competitive advantages, in addition to their incredible momentum. And the big question is still, how will AI agents pay? We want to own the rails, the infrastructure, the essential rails, the roads, the toll roads of tomorrow. So who is that? Is it Visa? Is it MasterCard? Is it Google? Is it Amazon? Is it Shopify? Is it Reddit? What are the rails of tomorrow, the essential rails, independently of who wins? They are going to win. Because the big fight, obviously, is between Google and NVIDIA. We don't know. And that's why we don't own Google and we don't own NVIDIA right now, even if they're fantastic companies. But we cannot know who's going to win. And that's why we look at the underlying essential infrastructure plays that are going to do well independently if Google wins or if NVIDIA wins. One of them is KLA, the chip inspector that nobody can quit, has, I forgot the exact market share, but we're talking 60% market share in inspection, if from the top of my head, if I'm right. And then we have Lam Research, essential toolmaker, largest market share in their part of the AI value chain. We have Carlyle, which might be the ultimate compounder and nobody's talking about. It's pretty incredible. Read this, guys. BlackRock, everybody knows about BlackRock. Great company, but there is no alpha there because everybody knows it. HEICO, something that's only discussed in value circles and in quality circles, but the broader market is sleeping on HEICO. Reddit, that's a more speculative play. I'm intrigued that 40% of the data that your AI uses to find something for you is Reddit. Then the next two big ones are YouTube and Google search, which is both Google. So Reddit and Google are really the data play. But Google has a moat, Reddit not yet. What is the moat? Well, owning the data. Okay, but you have to show that you can monetize the data. So they're just starting with ads, and Amazon began with ads in 2020, and right now it's starting to materialize that. So we have to monitor Reddit. I don't own Reddit. But I think it can be very, very interesting. I'm monitoring how defendable those modes are and how profitable ads will be and how much longevity there is. Right now it looks good, but I don't build on hope. By the way, my next article will be on the 4 things that can kill your portfolio, because there are only 4 things. And we all learned from Charlie Munger and from Warren Buffett, but Charlie, I think, wrote it in the more explicit way in his books, that one tool is to invert the failure. So if he thinks about a stock, what can go wrong? And then he starts his diligence process from there. So when I think about our investing process, our trading process, what can go wrong? What can kill us as a trader, as an investor? It's really 4 things. And one is hope. That's why right now I don't own Reddit, because yes, it's 40%, but the fact that they can monetize on it, increase ROIC and ROIC quarter after quarter, year after year in ads is something that I hope. There is no data yet because they're just starting. So we're talking hope. And I don't do hope because hope can kill me. So there's nothing in our portfolio right now that's built on hope. The compounding portfolio is 100% companies that have demonstrated a winning algorithm. There is no hope involved there. And our trading portfolio, there's no hope there. It's very probabilistic. 45 days, 30 delta or 12 delta, closed at 50%, highly liquid so that we can get out and in quickly. 93% win rate. That's not hope. That's a probabilistic, boring, mechanical system. Also, what can kill us is greed. So greed, for example, you look at your money management system, it says you can invest 25%, but you get in at 45%, which I sometimes do. That can kill us. So stay within your money management rules. What else can kill us? Fear. If it says you can get in 25% of your cash and you only have in there 12% of your cash, that's fear that's holding you back. So don't be fearful. You can be anxious and that's fine, but don't fear. That means observe your anxiety, do your work, make your system more mechanistic, more probabilistic so that anxiety doesn't really matter because the probabilities and the odds are on your side. You are the casino, you are not the gambler. And then don't let fear block you. Move on. Don't let anxiety turn into fear. So I'm still invested above 25%, even if I feel some anxiety, because it doesn't turn into fear that immobilizes me. Hope we discussed, and ignorance. That's the reason why I don't own NVIDIA, because I am not studying every day the newest developments between TSM and Intel and all the foundries. I'm not studying everything in robotics. So you can't be really, really knowledgeable everywhere. You have to pick a few fields where you can go really, really deep and you are highly knowledgeable. And so I've picked payments, fintech, technology, services, and industrials. That's where I'm good at because I have 22 years of being immersed in that field with boards, with executive teams of those fields. It's my job. I do this every day, 15 hours a day since 22 years, minus weekends. So I'm immersed in those fields. I know what I'm looking at. I know how to handle the risks in there. And I know what to look at when I talk to management teams or I look at their statements to see how they're handling it. What else do we need to discuss, guys? Let me check the time. We still have a few minutes. Let's look at back to the markets. I've been talking too much. Wow. Mercado Libre, meanwhile, up 8%, guys. Class 6%, SE 4.7, Amazon 3, Fix 3, CSL 2.4, Visa 2.1, Arista 1.9, FICO 1.4, Applovin 0.7, Ferrari 0.4, Amphenol flat, Linde flat, Harvia minus 0.8%. Oh, my kids own Harvia. That will break their heart if they see it. All right. Lam Research 5%, Hood 4%, Tesla 3.8%. This is what I am seeing, guys. What are you seeing? And meanwhile, our gold will print. Our Nvidia's printing. Yeah, it's a good day. It's a good day in the markets. It's not easy to trade today because VIX 14.8 is bullish. And when the market's bullish, the premiums are low. So it's hard to trade because premiums are much lower than usual. So you look at them and go, is it worth the risk? And it's better to stay in cash. So today, 75% will be in cash. Remember, so we won't make a ton of money today, but it's not about making a ton of money. It's about making repeatable, low risk, or better, risk adjusted returns. That's what it's all about. So risk adjusted means your probability of profit is 74%, 80%, 85% on each trade. And the risk adjusted means it's never more than 2% of your account. So, because what is really in your control when you enter a trade? It's the selection of the underlying and selecting a liquid underlying, so volume. Then it's the duration, 45 days out, not 7, not 0, 45. And then it's the delta, but delta will change. So in the beginning, yeah, it's in your control, but it will change and it's outside your control. It starts moving and it can move against you. So delta 12 or delta 30, that's still in your control. And the size, how many contracts? 1 contract, 2 contracts, 3 contracts. Stay small. Make sure each trade size is less than 2% of your overall portfolio. Now you are doing proper risk management. Those are the important things. They're simple, not easy, but they're simple. And because they are simple, they are not exciting. And because they're not exciting, most traders overlook them. They think they can jump over them. We think we're smart. And I'm the same. I sometimes disrespect my rules. Sometimes they come back and bite me. So over time, I've learned to be humble and to respect those rules. So if my money management system says I should be at 25%, today I will stay at 25% options. I won't jump over it to 30%, 35%. I used to do it last year a lot. But this year, I've learned my lessons. I stay inside of this. I want to be best loser. Best loser wins, right? If you can make small amounts of profit every day, over time, that compounds. It compounds a lot. If you look at last year, we made 98,000 annually, which means 8,200 a month from a small account just by staying inside the lane. And there was an outlier in May. That was the tariff tantrums. because that spiked volatility up to 60%. And when volatility is so high, premium is just high. So it was easy to make a lot of money in April and May because of those tariff tantrums, the taco trades. And in October, this is where I went above my limit. So that was risky. But I was greedy. I wanted to see another month with 13.6. And the account was bigger. So I said, come on, it must be possible if I just repeat that May performance to be again at 13,000. I pushed it too far. It went well, but I've learned about resulting. Resulting means when you think that a decision is right only because the result was right. But that's the wrong way to look at it. You can take a wrong decision and still have a right outcome. So you should look at the result when you assess a decision. A good decision depends on your decision-making process, not on the outcome. The outcome is called resulting, where you say, oh, well, it was a great decision because the outcome was great. No, that is resulting. It's a bias, actually, a psychological bias. All right, guys, this was the live trading of futures and stocks today and ETFs. Let me know what you need next, guys. 41 minutes in. See you next week. See you in the Sprint Club. Keep rolling, everyone.